Welcome back to Inspired or Acquired. This is the podcast where we interview real business owners, talk real numbers, and ask them whether or not they would sell their business. We have a super interesting episode today. We're joined by Katie and Mark Fleming from Columbus, Ohio. They own Owner Actions, and they are invested in operating in a lot of different businesses that you'll hear about today. So as always, I'm one of your co-hosts, Patrick Dichter, owner of Apple Tree Business Services. And I'm joined by my co-host, Clint Fiore, mergers and acquisition specialist from Dealonomy. So, Katie, Mark, it's good to see you. How are you today?
We're doing good. Thanks for having us. It's great to be on.
Yeah, I'm excited to chat with you. So, for folks who don't know your story, tell us a little bit about Owner Actions. What you guys do, some of the businesses that you own.
Yep. So we really got started in the space around 2016. I had worked in private equity and worked at mutual funds and hedge funds. And I think a lot of people, I saw the Harvard professor, kind of say you can buy small businesses for 3 to 4 times EBITDA, and you can get SBA money for it. Is like a 30-second video. And that was all I really needed, all you really needed to see to get started. We bought our first business. It was in Louisville. There was a cleaning company. That was one we actually did have a minority interest in that, but helped run it with my brother, who was the majority owner. We were in the market to buy some childcare centers, and then COVID hit, and we were under LOI, and the deal kind of fell apart during COVID. And like many people, we were just sitting there. There was nothing to look at. There was nothing to do during that time period. No one was selling their businesses during COVID. And we started Owner Actions, and it was originally something much different. So it was a website where small business owners could go. They'd fill out a 20-question questionnaire, and it would generate everything that they needed to do to either start, scale, or sell their business. And it was really intense. And then Katie wrote 400 articles for the webpage and blogs, and it was insanely detailed. So if you wanted to start a restaurant, there's 185 things to do. And what we found is that just overwhelmed people. And really, we were discouraging people from starting businesses as effectively, in a way, when they saw exactly how hard and how daunting and all the things they had to do. And there's an old Jensen Huang of NVIDIA has this quote that, if most entrepreneurs knew how hard it was going to be, they'd never start their business. And we were showing them how hard it was going to be. And so we just started, we were still working on trying to promote that business. And we just started making TikTok videos on business listings. And that was maybe 2022. And people just came out and just started asking us to help them. And eventually we said yes. And we've really kind of just grown from there.
Wow. That's neat. So they were asking you for help finding businesses for sale, or to help them get a deal done, or all the above?
The whole process. So we focus on the whole thing. So we do the search, we vet the business, we do the diligence, we do the quality of earnings, everything start to finish through the acquisition process. And then we stay on after, and we do financial management, payable, receivables. We do a lot of collections. And we also launched a marketing side as well. So we'll do digital marketing for the companies.
When we started, though, we mostly just did business reviews. So we would go through the opportunity with them, model it out, and then let them know if it would work for them and their situation or not. We started there, eventually decided to partner with them. We were seeing so many good opportunities, and we met so many amazing operators that really teaming up seemed like the natural path for us, rather than being a passive participant in this process.
So essentially your model, you were working for fees for that, and then you decided to work for equity instead and become a minority interest.
Yep.
We've worked for equity the entire time, and we kind of just made up the model, I guess, coming out of a wealth management background where, you become an advisor, and, there's typically a fee there, but you're working alongside people for the long haul. And so we kind of built our model around that. Like, what's kind of the equivalent shift away from more of a brokerage model to more of an advisor model? And equity seemed like the best way to do that.
Great. So, Mark, I understand you are currently still a wealth manager, and Katie, you are full-time at your acquisitions business. And, but this is becoming more and more part of your kind of long-term wealth building strategy, is doing these acquisitions.
Yeah. So that's been my full-time focus for, probably really since 2020 when we originally started the online service. So about 5 years for me. Mark says he's, splitting his time, but it's really probably a full-time job for him and on our actions too. And then as well as his other business.
Yes, I have two full-time jobs. No side hustle. No one above the other.
It's his work and hobby.
Yeah.
Hey guys, want to take a quick break from the show to thank one of our sponsors and tell you all about them. So Eversight is the company and our sponsor. They were actually a guest on the podcast, and they're somebody that I've used for digital marketing. A couple of things that I love about Eversight. Normally, if you go to design a website and have somebody really do it well, they're going to charge a big 10 to 20K upfront fee, and then you'll get charged hourly anytime there's updates. So Eversight totally flipped the model. They do a monthly subscription that covers great designs and unlimited updates. I use them for my website, and then they can also help with SEO, AdWords, and all your ongoing content needs. They're a great team. They're responsive. I believe in them. I know them. They're a guest on the podcast, so we don't take sponsorship lightly. And I'm a big fan. So I would definitely encourage you to check them out if you've been thinking about beefing up your digital marketing or possibly doing a new website. You can go to eversight.com/inspired and tell them that you found them on the podcast. And back to the show.
So tell me, so if y'all really got started during the COVID years, 2021 is when you started kind of getting this model figured out. What has happened since then? So give me an idea of the scope in terms of how many acquisitions you've been a part of and how many equity positions you've built up since you started till now in 2025.
So I think we're up to around 20 companies today. And we've also, we'll do SBA loan advisory as well. So through that, we've probably been a part of another 15 transactions. So we've been a part of around 35 total deals, with 20 that we've stay on and have in our portfolio today.
And those 20 that you have in your portfolio, you typically have minority stakes. Like, what's your typical percentage ownership?
It's typically 10%. So in most instances, it's going to be a 90-10 split. And then if investors come in, then obviously that's going to dilute down our partner's equity to make room for the investors.
Great. And so you're retaining that 10%. Are a lot of your partners that are the majority partners, are they getting SBA loans?
Most are, yes. Yeah.
Okay.
I think we've done SBA loans for everybody except when we do a bolt-on acquisition. So if we've had a few partners that have come back for second, third rounds, and in those cases, I believe they've all been paid out of the business so far.
Okay.
Yeah,
so
if we start adding the bolt-ons, there's even more transactions.
Yeah.
Yeah. Well, you guys, this is a fascinating conversation. I have been wanting to find folks like you more and more to have this conversation with, because I meet folks like you because I am an M&A advisor, and you would often be filling out our NDAs and submitting LOIs on deals that we do. And when I was a new broker, I had never met anyone like you before, because my family owned a small business when I was growing up, and all I knew was one business is all anyone can handle, and my family nursery business kept my mom working 7 days a week and stressed out, and I feel like it ran her life more than she ran it. And when I first became an M&A advisor, I was selling small businesses, and every now and then someone would inquire and say, yeah, I've already done 10 acquisitions. This will be my 11th one. And they still owned all the other 10. And it just kind of blew my mind that there were people owning all or pieces of so many small businesses, and they were still somehow able to be parents and have a life. And I just became fascinated by that. And I created what I'm coining a term of a whale shark in small business. And for those of you that haven't heard, a whale shark is just that term comes from the investment world, which you as a wealth manager, Mark, sometimes, wealth managers and other people, they'll call big money people whales. And then Shark Tank popularized sharks as entrepreneurs. And so I think folks like you being called whale sharks is fair, because it's kind of like you're on one hand an investor and you're allocating capital and you're being, a wise investor. But on the other hand, you're entrepreneurs. You have entrepreneur DNA, and you're helping advise these companies on a tactical level. And so I just became fascinated by that. I've been meeting more and more, and we're going to be doing a series of videos where we interview whale sharks. And so this could be our first, kind of kickoff into this world as these entrepreneur investor hybrids. And so with that, thanks for being here. And, I would love to just hear, first off, let's just get a little bit deeper into this portfolio and say, are you niching into an industry, or are you diversified a bunch of different industries? And how do you pick acquisitions out of this big world of opportunities?
So we find our partner first. And so ultimately it's going to be, what business fits them the best, not what business fits us the best.
I love that answer. I love that answer. I see so many people try to square peg, round hole that doesn't fit their background, but sorry, carry on.
Exactly. Yeah. We have that view that, we go through this process when someone comes to us. We call it our get to know you process. And Katie really leads the search. She's the master of figuring out what the best business is for that person. Because most people don't know. I'd say 95% of people come with us with really no idea of what they want to buy. And everyone starts really broad. And we can usually tell when someone's getting close to a transaction because their view of the world starts to narrow and they start to become more focused on a certain industry that's really good for them. And then you can tell when someone's getting further from a transaction when they start to go back up the funnel and start to broaden back out. And I think it's important for just so many reasons. One, to even be able to get in front of the seller. That's really where another area Katie shines, is selling us and them together. So, we're going to sell their ability to run the business and why they are the best person to operate that business, so we can move ourselves to the top of the pile. And then with the broker, the M&A advisor, they love us because they know we can close. They know we can get deals done, that we're not just going to have it sit for a long time. So that really helps us move to be in that top 3, top 5, and then still trying to get it. You guys probably see it in the space. Not every deal goes to the highest bidder. Usually you have to at least be in the ballpark, but really just positioning. If we can't position ourselves as why we are the best person or group that should be buying this business, then we probably shouldn't be looking at that business with that partner.
Yeah, fair enough. So I originally connected with Katie because I saw this post on LinkedIn, just bought a second restaurant. So I've heard cleaning company, restaurants, what else is kind of in the portfolio?
We have a big retail store in the Florida Panhandle. They do outdoor kitchens and fireplaces. They have several logistics companies, some home service. We have one HVAC that everyone loves. We have water well drilling, water testing, bigger set of edible arrangement stores. What else? There's a gym. I need the list in front of me, but it's pretty broad, and it's not it's not a matter of diversifying for us necessarily, and it's not a matter of trying to build this trucking portfolio. Like Mark said, we're really focused on what are our partners good at. We like picking people that have really specialized industry knowledge and running with them. So that's kind of what we've created, is this portfolio of really great people who are paired up with really great businesses.
Nice. And I'm sure it's a big range, but what's kind of the range you're in most of the time for SDE or earnings? Is this $500K to $1 million, or what's kind of the range on most of the buy box?
So the bulk of the businesses are kind of in that 750 to 1.25 range. Okay. We do have some people that we might go past the SBA world and look at, closer to the $15 million deal size, where you might have, somewhere in that $3 to $5 million EBITDA. But those, it's hard to find people that are good for coming in and can attract it. Usually you're bringing in some investors for that, that has the true operational background to really put that together.
All right.
For example, we have somebody that has a really strong construction background. He ran a really big commercial construction business in Bolivia. He's already done the work. He knows the skill. And so he's somebody that we can really get behind and kind of push further than maybe somebody who has some management experience, some industry experience. But this guy is somebody that we can get investors for really easily and nudge up what we're looking at.
Nice. Okay. And the investors that come in, are they looking for kind of the traditional like search fund investment where there's a step up, or they're thinking there's going to be an exit in like 5 to 7 years, or what does that look like?
Most of our investors probably aren't familiar with the search world and kind of how funds are structured. The way that we set ours up is the step up. We just do, 2-for-1 on the equity. So if you put 5% in, you get 10% of the company. And then we say that there's the company will buy back their stock after the SBA loan is paid off. And they could have the option to maybe, we distribute the shares out of the fund and they can continue to hold it. Because we say we're forever holders. And we do, our partners can buy us out. But I say our goal on our services and our financial management and our marketing and just like our consulting and helping with them is that we want to make sure we do a good enough job that they never want to buy us out, that we're going to stay there forever. But at the same point, I understand someone wanting to own 100% of their business and that's going to be important to people. So we do have a venue for that, but we're true permanent capital.
I have so many questions, guys. Let me start with this one. Okay. Back in the napkin math. All right. It's very compelling in theory and on paper when you partner with someone on $1 million earning company and you have a 10% ownership stake as the minority interest holder here. The broker, myself, we like to pitch it like, hey, if you do this, you're going to be making $100K for your 10% ownership. But it doesn't always work out like that in the real world, because there's sometimes that J curve that the company goes through where earnings go down before they go up. And so as someone who's done 10 plus acquisitions, let's call it an average of $1 million of earnings when you start and you own typically 10%, like, are you making $1 million from those 10 acquisitions? Or are you making less than that, more than that? Like, tell us what's realistic to expect if you were to come into that 10% equity situation. Does it go down and then up, or what have you seen? And
so there's different ways to look at it, right? Because there's the actual cash flow, what's being distributed. So that's going to be your lowest number. And then, what the total earning, your share of the earnings is. We're pretty conservative on distributions, and most of our partners have wanted to stay a little more growth focused. So I'd say on average, each company is only distributing maybe 30% of what it can. And we have 2 companies that haven't done any distributions. They're just growing. So, and that's one of the benefits of we're very long-term focused on it. So we're fine, as long as they're spending the money wisely and the company's growing, we'll be made better off. So, from a cash side, we only get maybe around like $200,000 a year in cash. But then if we went and we pulled, what the EBITDA would be, I haven't done it, but it would definitely be in the millions, well into the millions.
Yeah. So it sounds like you give your majority owner discretion on those distributions, or do you have some sort of covenant or requirement as an investor? Like, do they have to do tax distributions, for example, or anything like that? Or do you just let them totally decide how much comes out versus stays in the business?
We let them decide. And if there isn't some type of depreciation expense or something that's going to generate, and you're going to have a big taxable year, they're likely going to do a tax distribution because they have to pay their tax. and we'll participate with that. But we just say we're there to support them and help the company grow and, whatever their vision is. And so if it's more of, they want just more of a steady state business that kicks out more cash, then, I like receiving checks in the mail. It's, doesn't bother me. But if they want to just focus and just really grow it and reinvest the money into the business, we're fine with that as well.
And I forgot the number of transactions. You said there's 20, right? That you're actually still equity owners of?
Yeah.
Okay. Out of 20, how many have gone down in flames total loss?
There's a couple that could be, but we've been working really hard and righting the ship, and I don't think they will.
Yeah.
And it's always an instance of some type of fraud on the part of the sell side. And there's really no level of diligence that can catch when someone's going to commit outright fraud against you. So we have one pending litigation that, I feel like we have a pretty good case. So that'll get a good chunk of money back from the seller. And we've right-sized the business. So we're surviving, not thriving.
Mm-hmm.
But we're in a good spot, and I think we're in an area where you can even start to grow. So that's one where it looked really bleak at one point, but we've been working with our partner, and our partner has done a fantastic job, and we've been able to pull through, and we've been developing our skill set of getting cases ready for trial, and emails and filing and support documents. And that's what helps having our financial management too.
Yeah.
Is our team's really good at kind of going through and really documenting exactly what happened and laying out, is a really strong case. It's not, there's so many skill sets we've developed over the years that you wouldn't have expected. And then we also, we buy the reps and warranty insurance now as well. Or wish we would have known about it before that acquisition.
Yeah.
But we have a claim going now too that, we'll probably get a $2 million payout on a reps and warranty insurance claim. So the business isn't doing great.
What's the company that does the reps and warranty insurance?
I'd have to get back to it. Tom does it for us.
Tom Gilroy.
Tom Gilroy.
Okay. We'll put it in the
Is
show
he in New
notes.
York?
Yeah.
I know Tom. Okay.
Okay.
Met him at HoldCo conference a few years ago. Shout out to Tom.
He's phenomenal. He's been so great for us, not only getting it set up, but then when we did have to make a claim, and insurance companies, they're there to try to deny the claim, and he's been such a champion for us and trying to get the full amount and make sure that the insurance company actually pays out.
Well, I'll have to holler at Tom. That's something we don't see too often, but as someone that's done a lot of acquisitions like you guys have, and recommending it, that carries a lot of weight. So I think we'd like to have that available for some of our buyers that might be interested in it.
And it's a lot of people don't understand, but I would never do another deal without it. It's such, I don't know how much longer the insurance companies are going to be offering it. To insure 100% of your purchase price for 1.5% of the deal. Mm-hmm. Like that is such mispriced insurance to me that I will just buy that all day, every day.
It's a no-brainer for us.
Wow.
Okay. So we've talked about the deals that have kind of had issues or gone south. Is it like a bell curve? There's like a big middle, and then you've got some that are crushing now, or kind of what's it look like? I know it's.
Yeah, that's exactly what I wanted to know, Patrick, is like, I'm trying to get a handle on this 20 deal portfolio. It sounds like 2 were really rocky, but you haven't had any bankruptcies yet. You haven't had any total losses or write-offs. You just have one with a big, pending litigation, and you took a couple hickeys on your 20, but as a majority kind of performed about at expectations. And have you had so many outliers to the upside yet?
We have. So I'd say the majority, there's almost always some little drop off that first year or two with a new owner. Especially I feel like seasonal businesses, I think people sometimes have a hard time, really, kind of, I guess, making hay when you're in season. You got to do good enough to get you through the other part of the year. So that's a big adjustment for owners. But yeah, we have a few that have really taken off. The water well company has really taken off, and we've been approached to possibly drill for uranium, and lithium, which I thought is kind of interesting. So we have some really good growth opportunities there. And there's even opportunities. I think our operator had a background in oil and gas, so he keeps wanting to pop an oil rig up somewhere. He's like, it's the same process, and it's get more money for drilling for oil than water. But just the water business has been phenomenal there. So that one has grown a lot, has a lot of opportunities to grow. If we do the lithium and uranium, it's going to be monstrous for that company.
That's exciting.
Hey guys, we want to take a quick break from the show just to tell you about our companies that make this happen. My name is Patrick Dichter and I own Apple Tree Business Services. We do accounting and tax nationwide. So if you own a small to medium-sized business, we'd love to help. And we can also do financial due diligence for any acquisitions. You can check us out at appletreebusiness.com.
And speaking of acquisitions, this is Clint, your co-host. My company is called Dealonomy. You can find us at dealonomy.com. We are on a mission to just make it 10 times easier to buy or sell a small business. If you're a buyer, you probably feel like finding a good business to buy is like searching for a needle in a haystack. We have created the Needle Store, where you can just go find a great business that's turnkey, ready to purchase, with banks ready to lend on it. Go find you a good one. Go buy it at dealonomy.com. And if you're a seller, we're the only place you can sell your business for no commission with a fast, free, guaranteed result. And so it's very innovative, easy button for buying or selling a business. Hope you join us at dealonomy.com.
All right. Thanks for supporting us. Now back to the show.
So you guys are 42, right? And have 3 kids. We got this on our notes from you. So you're about my age and, similar families. Give me an idea of what this has meant for you personally on your finances. So, you were mid-career, I guess, when you started this journey. You're not fresh out of school and also not at the twilight of your careers. You're right in the middle, in those prime ages with the kids. Can you give me some sense of what this has done for your net worth over the past 5 years, and either the number or percentage, or something? And my thesis on Whale Sharks is that if you can figure out these strategies and how to successfully buy, run, operate, and hold small businesses, that you can kind of get outsized returns by mastering these skills. And so you seem like you've done a good job. You've been in it for a little while as mid-career professionals. Can you give me an idea on what this has meant for your family net worth or your finances?
And it's a dramatic, very, very large increase. Our model, it's kind of different in a way because we're not putting direct cash into the deal, but we have 8 employees. So we're spending money throughout the process. So we just spend money on the deals in a different way. And we spend money in a way that there's leverage to it as well, right? So there's, if we're really slow, it's been slower. The last start of the year was a little slower in the market. There weren't as many businesses to look at. Effectively, our cost per acquisition is much higher than if, when the market's really humming. So it's added a tremendous amount of leverage. And then obviously the SBA being such a great tool it's probably, 8, we're already 8-fold increase in probably net worth, 5 to 8 times in just a few years. And what we really like about our model, and there are a lot of reasons why we kind of did the for equity model, but that's stuff that we'll own forever. And like I said, it's a great investment. I manage a few $1 billion of investment funds, and the small business space is the highest reward to risk ratio I can see. And I think some of it comes from the subsidy on the financing. that helps a little bit. And it being somewhat undiscovered. I mean, it's the highest risk. I think there's always this view that there's no risk to kind of the ETA space and buying a business. Like it's a lot of risk. But then there's the upside is tremendous.
So because of so much leverage that these deals create and that you've had success on 20 transactions, let's call it 10% equity on 20 deals, that means it's almost like you own two larger small businesses 100% that you didn't put any cash into, and if they're back of the napkin math, you don't have to say if I'm right on this, but like, I know how businesses are valued, and I know that $1 million earning company usually trades for $4, $5, $6 million oftentimes. And if you owned two of those, like, maybe you've built coming up on 8 figures of wealth inside of those 5 years. Like, we're not talking peanuts here, people. Like, even though he said, y'all are enjoying 200K or so of additional cash flow from the distributions, that's not the full story. It's that equity, that enterprise value of this portfolio that is snowballing into this probably multi 7 figures, round and 8 figures or more of net worth. And I think you glossed over it, but I want to reiterate, I heard it right. Like, you started this at what, 36, 37 years old. You're a successful career person as a wealth manager. So I'm assuming you invest as well, since you're a wealth manager, and you said you 5x your net worth or more, from when you started over the last 5 years. Like, that's incredible when I think of what you likely had saved, as a successful 35-year-old versus 5xing it by the time you're 42. That's rocket fuel right there.
It's another benefit of the for equity model, right, is it's a forced savings vehicle.
Yeah, it'll work out well with our kids aging into college. That's how we're looking at it.
So you still have to, even though you're growing so fast on paper, you still have to make those smart decisions with your kids and budget well and run a tight ship. And so, yeah, it does force you to be disciplined because it's not available in liquid. But when those businesses eventually sell, I mean, it can become liquid and you can have real windfalls down the road. Which leads me to my next question. And our favorite question on the show is, what situations would have you sell? And are you letting your operating partners kind of drive that decision, or do you have some way you try to influence that decision?
It would be their decision, and it's their company, and we're there to support them in whatever their goal is. So, if the situation where we just gotta too good to pass up offer, we would advise them that this is a really great offer, and you might want to consider it. But there's still, it would be their choice to say, like, yeah, that's a great offer, but this is what I love doing. I want to keep running the company, and we would support them in that decision.
Makes sense. So you're content to just let it ride, let it grow, take your piece of the distributions, and then it's up to them when they want to sell. I think what a lot of people fear in doing deals the way you do, where you're 10% to someone that's 90%, is getting taken advantage of, because you don't have a lot of power when you're a 10% owner. And I know a number of investors that they don't invest unless they really control things. And you, like, how do you get comfortable not having control on these, and what safety mechanisms have you come up with to protect yourself as a minority interest holder?
So we have a few clauses in the contracts. We have to both agree on their salary and distributions, and a few other control items to make sure that we aren't taking a big risk, that there are some protections. But ultimately, really, it comes down to, we work with people for a very long time before we actually enter a transaction. You're searching for a year or so, or 6 months, or however long, and you're going through all the underwriting. And we can tell when someone's not going to be a good partner at some point during that process. And usually we just kind of end the partnership there. So it does require a certain trust. I mean, if someone really wants to screw you over in just about anything, anywhere, like they'll figure it out. And we've been fortunate enough to partner with just really good people that, that's not how they go about things. That's not how we go about things. And we trust them. I mean, it's inevitable at some point, someone somewhere will screw us over. Statistically, I think it has to happen. But I think what saves us a lot is that process of really, really getting to know them during the acquisition process.
And we talk with them all the time. We have insights into all their books. So, we keep a good eye on things. We talk so often that the relationships are good. I think once we would see something souring, it might trigger, some further inquiry, but all the relationships are so rock solid that we still feel good about all of our partners and our deals.
I have a couple deals where I'm minority interest holder similar to you guys. And to me, a big deal is I just never want to be stuck in a partnership that I'm not having fun with. And, I don't ever want to be forced to be a partner with someone I don't want to be a partner with anymore. And I don't want them to be forced to be a partner with me if they don't want to be my partner anymore. It's like a two-way street. And so one of the things I always require is a buy-sell agreement where we kind of both have that lever to pull, where after a certain period of time, if you want to buy me out, and I'm typically advising as well, like kind of similar to you guys. We have a mechanism there where it's like, yeah, you can buy me out, but at the same time, I can require you to buy me out, if I want out, really bad. And we build a way to do that that's fair and doesn't put an undue burden on the cash of the company. So they could finance me out over time if needed. Do y'all do stuff like that in your agreements? Do you have a thought process for the buy sell?
We do, but it is tricky on the buy sell. It's easier said than done because from an accounting purpose, when we acquire a new business, your debt is roughly equal to the enterprise value. But by the time all the costs and everything said and done, that when my taxes get filed with each company at a dollar value. Mm-hmm. So if you did a buy sell agreement at that value, obviously there's a lot of work that goes into an acquisition. Like we don't want to be bought out for $1. Mm-hmm. So we typically say the buyout's at the enterprise value. So it would make no sense to buy us out when you're at that early point. But once the loans are paid down and the business is in good shape, then that's when the buyout could happen.
Mm-hmm. Great. So they have that mechanism. They wouldn't pull that lever unless the debt had been retired or they were
at least close or hopefully retired.
That's awesome. The other thing I think a lot of people listening are probably thinking here is like, what skills do you need to do this? Like there's so much that goes into this. If you were to put like a ranked order of the top 1, 2, 3 skills that has made you successful in over 20 transactions, is that evaluating that partner? Is that the most important one? Is it evaluating the company? Is it your skills as financial advisor to the company? Like, what's the master skills here that make this possible for you guys?
Yeah, evaluating the person is probably first. Evaluating the business is a very close second. Mark's a chartered financial analyst. Business development's important. I have 20 years of experience in business development. What else would you say, Mark?
Everything everywhere is relationship management in a way. Being able to work with the sell side advisory community and working with attorneys and trying to negotiate transactions and working with each other and a lot of deals get stuck negotiating that purchase agreement, working through that, like I said, being able to communicate that we're the best buyer for this, and finding lots of people that do all kinds of different things and maintaining really good relationships with them.
Mm-hmm. So let's go to that first highest skill you said, Katie, which was evaluating the person that's eventually going to be your partner. How do you find these folks and how do you vet them? Like, what's your, just a quick high level overview of your process there?
So funny story. Most of our partners we met through TikTok, and that sounds crazy
That's
to
wild.
hear. Yeah. So we have a TikTok channel that has roughly 45,000 viewers that we've built up since, like I said, 2022. And people follow us for a long time, eventually reach out and we talk and we start building this relationship. And it does take about a year, sometimes 18 months of working with them. Sometimes we do business reviews first and just kind of ease in. And we've met a lot of really great people through that program. And then lately it's been referrals with people that we've already bought a business with.
Yeah, TikTok's by far our best channel. Referrals can be tough sometimes because I think a lot of people think it's just a way to get rich quick and easy. And there's so much content out there that people that haven't watched our content for a long time, it's a much longer process to get them ready or to make sure that they're the right, they're what we're looking for in a partner. Since we are investing in this person, so we are selective about who we work with. So we have an application process to become our customer. And the people that watch our TikTok by far are much more successful at both acquiring and running the businesses than any other venue that we meet new partners.
Yeah. Our TikTok page is educational. Mark's not dancing or anything like that.
I was about to ask.
It's always topical. It's either what we're working on or it's explaining a part of the process that's kind of come up that week. So we're kind of coaching them without them really knowing they're being coached, and they're learning as they go. And at some point they build trust enough to reach out, and kind of goes from there.
8 employees that work for the company. What are they? Accountants or analysts, or what are they? Marketing? What kind of roles do they do?
The bulk are on the financial management and growing, so we're probably going to have to hire another person here soon. So on the acquisition side, right? You think about the business, people flow through the acquisition side. Everyone stays at the financial management side. So that team is where our headcount growth comes from. And we try to run those services. I try to run them near break even. I think I'm losing a little bit right now on it. But we try to run our financial management and now our marketing at a near break even rate and do that as a service to our partners. Is one, we could lower costs. We do it dramatically less. We had our water transportation company, they were paying like $90,000. We replaced it for $20,000. So you got a pretty big savings, and the quality goes up too. So we're pretty we have Ariane who runs that team, and she kind of let her run somewhat autonomously as kind of the head of the group there. And she does a fantastic job. So quality up, price down. But on the acquisition side, so we have Francis who does our, he works through the loan and kind of does the deal processing. We have Norvin, who is a CPA, that he does the analysis of the companies. He'll do the initial look, and then he'll do the projections and everything for the business plans. He also puts together some analysis on the companies that we own as well. We have Carl, who does our marketing. He's starting to do the digital marketing for the businesses. And then our financial management team, we have 3 people now. Will be 4 pretty soon.
Nice. This is super interesting. And you guys started, I don't know, 4 or 5 years ago in this game, and it feels like it heats up like every year. Like there's more and more people interested in ETA, and I don't know. Are you feeling that? And also, like, what do you tell the people? Is competition going up, or are valuations going up? What are you noticing like now versus a few years ago?
So it's funny, in 2023, when the SBA rules had changed and the down payment lowered, we noticed a huge influx of people interested in this path. And I don't think it's really let up. I mean, it's been so steady. The number of, gurus popping up talking about buying a business and the people interested in it. I think the competition's still really high. I think the number of buyers actually ready to pull the trigger is probably staying pretty steady though, in what I'm seeing.
I agree. It's like crowded on the front end, but like a lot, not as many people are gonna.
But it does feel like valuations have ticked up this year, more than last year. And some of it's just deal flow that we've noticed is down also. And then what we do see is higher price.
It seems like it's picking up this summer, which is odd. Summer seems like it's usually a slower time, but it's been really busy on our side, the acquisition side.
Yeah.
Of evaluating.
Yeah.
Do you do broker deals mainly, or do you do proprietary outreach or a mix, or like how do you find your deals?
We're agnostic to how we find it.
Yeah.
So we love doing broker deals. A lot of people will give it a bad name, and we think usually they're better deals because they've already been, if you're working with a reputable sell-side advisor, it's been looked at by someone, price expectation has been set, versus the off-market stuff. You get a lot of people that are just going to waste a lot of your time. They've got $200,000 of SDE and they want to sell for 20 million. But we'll do so typically with our customers. So if someone's still very broad at what they want, it's almost exclusively kind of on-market broker that we're going to look at. If someone is very narrow in what they want to do, then we'll do more outreach, more off-market.
Makes sense.
Yeah, we
Have you joined?
Who does, he already has a business. He does semi-truck trailers, sales and rentals, and he's in one city, wants to stay in that city.
Okay.
I can't wait for those deals to come on the market. So in those cases, we go out and look.
All right, I got a live pitch you on this. Have you joined Dealonomy yet?
Yes, we have.
Awesome.
Yeah, I think we're free members, but yeah, I see the value in it.
Great. Well, I didn't know if you were on there yet, but we're glad you're there. I feel like most of our deals will be in your sweet spot. They're mostly SBA financeable deals at kind of the high end of the SBA range. And we have some larger middle market deals and a few smaller ones, but like 1 to 10 million deal size is where most of ours are going to fall. And that kind of lends itself really well to your model. So more and more we'll be launching all the time. I hope you'll keep your eyes peeled. We'd love to work with you, especially, I mean, they kind of hit the nail on the head earlier. When I think about from a broker's perspective, it gives us a lot of confidence as a broker when someone's done, they've been a part of 35 transactions. They own equity in 20 of them. They know how SBA loans work. We don't have to go through a big education process with them. They're going to present well to the seller, because that's Katie's specialty, and she's done that a bunch of times. And so what we're looking for as a broker is we like good offers, but we really like good people that we believe are going to close the deal. And our biggest fear is that the deal goes under contract with the wrong person and they end up yanking our seller around, trying to retrade the deal or walk away from the deal after dragging it out for 6 months. And sometimes we end up with a year of work into this deal and the seller is so frustrated, they just decide, never mind, I'm not going to sell this business anymore. I don't like you. I don't want to do any deal with anyone, because that's the risk we take, bringing the wrong buyer to the table, even if they make a strong, even if they slide a big number across the table, that's not the full story. And all brokers know that. So, we'd love to work with you on a transaction if you have a good candidate that finds something on our site. But I've been enjoying the heck out of this conversation. I'm trying to think if there's any other. I mean, I could go on and on with questions. Are you? Has this lifestyle been good for you guys as a family? With the 3 kids and stuff. Like, do you feel like you've been able to get decent family balance in all this? So like juggling 20 businesses and a wealth management career, or can you speak to that for a second for us?
I mean, it's very busy. Like I said, essentially two full-time roles. But But I mean, in the past, I'd worked at hedge funds and large private equity firms. So you're working 60, 80 hours a week there too. So it's kind of nice having it split. And there's so many synergies between the two. And you learn something in one place and you use it the other, or, test things, and they work really well together. On the wealth side, our niche is working with business owners as they're exiting and exit planning. So there's a lot that goes in, and it helps in both worlds that probably have a unique view of the full life cycle of an entrepreneur, from that first I want to get going to all the way through retirement, and it works really well together. I'd say we still find lots of time with the kids. You always like to find more, find times to take vacations, which has been nice that the company is at a point where we can go away for a week and things can still, for the most part, keep moving while we're away. So that's really nice, but it's tough. And I mean, there's a reason why not a lot of other people do what we do, because there's a mismatch of cash flow. Like if I was evaluating our business, objectively, I would say that's a terrible idea. But you're going to work a lot. You're going to work with someone for a year, not get anything, and then potentially get something. The companies that haven't paid out cash yet, we might not receive anything for 10 years, and that's a terrible business model to do work today and potentially receive money 10 years from now. But I think we're fortunate enough that we're in a position that we can do what we want to do, not what we have to do. And we wouldn't change it. We really like becoming true partners with our customers, and we like being involved and helping the businesses grow. And we like seeing it, in a way, having managed money for people that had already accumulated lots of wealth. We're going to create new wealthy people.
Yeah, you're playing the long game, no doubt. So that's great. This has been a really fun conversation. I feel like we could go for a while. We might have to have you guys back on, but if people want to connect with you online, where's the best place for them to do that?
You go through our website, owneractions.com, or we're both on LinkedIn, Katie Fleming and Mark Fleming. So either.
Our TikTok, Owner Actions, is our main platform. All our videos go there, and then a lot of our videos get posted on YouTube for people that don't want to download TikTok. But I would say there's a lot of really good stuff on there. If the algorithm shows you what you want to see, and if what you want to see is like good educational content, there's a lot of good educational content on there.
All right, we love that. We'll link to it in the show notes. So thank you for coming on, and we'll talk to you guys soon.
Thanks so much. Nice talking to you both.